these are too enticing. Like I think this is just asking. Please come up here and take my buy stops. Please come on up here and let me get knocked out. Okay. Or traders that are seeing this as a bull flag, they have their buy stops here to be buying long. They want to go long there. And if I'm accurate by what I'm suggesting, and if it does pan out, the shorts that have buy stops here for protective stop loss purpose only, if they run that, they get stopped out at a loss. The folks that use this idea here as a bull flag, they have a resting buy stop to enter long, to get long, to be net long. I think that at 10 o'clock or 9:30 into 10 o'clock, the run into this area may be higher. They will be in short-term unrealized profit that I think eventually would be a cause, a reason for them. Let's assume that, say these two lows here stay intact and we don't go lower than that prior to 9:30. Okay. Or if we drop down there at 9:30, then I would anticipate price then reaching up here post 9:30. But assuming these stay the same, okay, and in 9:30 we run higher here, that trips in the retail traders that use a breakout strategy to go long. So their buy stop is their entry mechanism. That's their order to get in, not a protection behind a short position. It's an entry for a long position. They would be allowed to be in unrealized profit, but if they use the idea that I'm outlining here, and I might be wrong, it could just keep on going higher or never go up here at all. But in my mind, I'm thinking, even if they get in, they will have a short-lived objective. And if it starts ripping up to this level here, they're not going to want to get out because they think it's going to go to the moon. And then eventually at 10 o'clock news will come in, and then maybe there will be a sentiment shift that is used against them. And it starts raking them across the coals and goes down below these lows here, and they are no longer profitable. Consumption. Would you be comfortable with that short right now? Looking at the time, we're about 95 seconds from the opening bell. Would you feel comfortable in that short right now? With pools of liquidity here and here. I wouldn't be. This is also a time when I would not be in trying to early entry, because sometimes you'll see me enter before or right at 9:30. This is one of those instances where I wouldn't do it because of all the things I've talked about this morning. Now, you want me to be able to condense that in a 5-minute video. I ain't got time. Listen to this guy. He talks too much. I just gave you a clinic on stuff that you can't find in books, and no other mentor is going out here doing it and talking about it. 30 seconds. And this is where you want to be at in the early stages of your development, where nothing can hurt you. Nothing can cause any kind of pain. If you're right or wrong, it matters not. You're studying. You're looking at for the purposes of understanding the logic, understanding narrative. How does the market use the existing orders that are above and below the marketplace on the day and time with an economic counter like we have today? 9:30. Shorts are gone. Longs are net long. Told you, it was not model 2022. So we've seen the short-term buy side taken here. Remember where the sell side is right here? And that little imbalance here, and that small little volume imbalance, which I should have on the chart. Let's put that there real quick. I'll just highlight the low of it. So it can sweep below here, hit the small little fair value gap there, and that low of the volume imbalance right between these candles' bodies. That's what I'm showing you, in case you haven't studied what a volume imbalance is by me yet. It's the separation between, let me take this off. It's the separation between these two candlesticks' bodies. They can be linked with the wick or wicks, but the volume imbalance is the fact that there's no overlapping or touching of the two consecutive candles' bodies. See how it's whipsawing? Why is it doing that? Because you have a news driver that's the second one in the same session. 8:30, the news embargo lifts. That starts technically the morning session. Like you're in there watching what it can do based on the news drivers that come out at that time. Then you have another one at 10 o'clock. So we already had sentiment in the marketplace from London and from yesterday. It's been what? Short-term bullish. And then we had 8:30 news send it where? Higher, even still. Now we have the opening bell at 9:30. We've cleared the buy side. We've killed the shorts. Now, short sellers that want to sell in the breakout, they now have been engaged right here. I'm going to take this rectangle off because it's already done what I needed to do. And I'm going to take this off because it's already served its purpose. So I'm going to show you. This is where buy side is at the moment. Watch the consequent encroachment of the wick. We want to see it close above that. If it closes above that, we'll expect follow through. The reaction off of that fair value gap right there I mentioned, that in itself is a high frequency trade. Look at the candle's low up here, right up here. This candle's low is 14,985.75. The low of that candle comes in at exactly at that price. That's perfect. What did I tell you? Who was put in the marketplace below here? Shorts that want to sell on what? A stop. The way you would use this one here is the same way I mentioned earlier. As it hit down here, it's taking sell side, these lows here, trading down to the fair value gap that I outlined real time beforehand, and then it stops right to the tick, turns around, and runs consequent encroachment. It doesn't need to take this high out. Is there enough range in there to take 10 handles out? Yes. Is it something you should trade today? No. But it's something you can journal. You can observe it. You can log it. If you're following along today, and this is not one of those exciting lessons where I explain something beforehand and the market explodes and moves in a directional bias and at a fevered pace getting there. But this is the stuff that you want to learn. This is the stuff that I wade through and I don't talk about on Twitter. We don't ever see these types of conditions when I'm chit-chatting and calling a specific move or a level. It's never in these conditions. Have you noticed that? Because that's the key takeaway this morning. Why am I so accurate? Because I don't talk about the times when it's like this, because it's what? It's much more difficult. It's 50-50, one way or the other. It could do either one of them. And you don't want to be in a situation like that risking real money. You want it to be so one-sided that it's obvious for you to expect it to behave a specific way. Now, if it was another day, not Friday, and we didn't have the 10 o'clock news, I would be selling short right there. As soon as it hit that low right there, I would have done it there. Looking for a run below here, first partial, and then I'd look to see if it could accelerate. I'm not saying you should do that. If you remember what I said if it were not Friday, if it was like Thursday or any other day, based on this and we didn't have the 10 o'clock news looming, I would trust that right there as an immediate rebalance and look for lower prices. But based on everything I've outlined here, that's why I'm on the brake pedal. I'm not even, the engine's not running today. Like it's in neutral, park, whatever it is. The keys are in the house. I'm not driving today. I'm just sitting here talking about something over the charts with you. Hopefully reaching you and giving you a reason to not want to feel like you got to be doing something every single time. Because if you don't know what you're looking for, or if you can't identify quicksand, you'll fall victim to it. So these are all things that, now think about what I've already talked about. You're going to want to watch this video a few times this weekend and going in the future, because these are things that they can't be taught in a book, and I can't teach it in a 5-minute video. Like it's impossible. Nobody can condense everything that I'm covering here in a small little sample set of choice words, and then you're going to understand it. It doesn't work like that. I wish it could. It would save me a whole lot of time. So in here, all this price action back and forth, the only thing I'm looking at, and I don't trust it, the only thing I'm seeing is that initial gap here, drawing that out in time. They keep using that. I don't trust it. It wants to keep going lower because in my mind, this should have already went down below that low. It just feels like they're sending it lower to get people wanting to go lower. And every time they go lower, more people are going short. That just builds the buy side up here bigger. So this is like, in my mind, I see it as engineering more liquidity above the highs. All things equal, if you haven't had a trade today, that's good. But if you sat down your charts and you saw this right now, would you feel inspired to trade it? Don't look at it like this. Like if you saw it naked, no lines on the chart, would you feel like, oh yeah, I definitely want to trade that? Why? What are you trying to do? You have to know where these problem areas are, where price will be absolutely manipulated. Whenever there's two market drivers in the same session, I anticipate this type of whipsawing, fickle price action where it can trap you. And many times what you think is there in the chart, the opposite's coming. The opposite's going to just spring out there and you're like, man. And at 4 o'clock, it's going to all look obvious to you. The people that got short below here, want to break below that, selling weakness. What do you think they're feeling right now? Remember, the run above here, the buy stops, were used for what? The bull flag traders. Their stop loss is going to be placed where? If they get filled on a break above here, their stop loss is going to be what? Below here. They got tagged. So far, nobody's profitable today. They keep banging both sides. Both sides. This is seek and destroy. For a profile sense, this is seek and destroy. And what's going to happen at 10 o'clock, the real run that purges everybody, where the majority of the liquidity is, that's what's going to materialize. Everybody wants to come out here and trade Bone Thugs and Harmony patterns, and they get caught up in this. You find out it's trading Weird Al Yankovic. Watching paint dry. We're talking about narrative today. We're talking about avoiding problematic trading conditions. We're talking about days that have two economic drivers in the same session. How about them shorts? I can't tell you how many times as a 20-year-old, and when the market would do this, man, I would buy, then sell, then buy, then sell, then buy, then sell, and then boom, the account's gone. And then later on, when the move comes, I would swear up and down that if they never would have just stopped me out on that last one, I would have been in that move and got it all back. And that's never true. You're lying to yourself. I was lying to myself then, and you're lying to yourself when you do that too. Sometimes there are days and sessions that are presented as an opportunity, but they're cleverly disguised impossibilities. Teaching when not to trade. That's a novel idea, isn't it? But that's the lesson you need to learn. All right, so just a little bit less than 12 minutes to go before we have that 10 o'clock news event. I'm going to break here because, as I said, I want to see it with my own observations. I believe we're going to go above the blue line, and then once we do that, I would like to see it take out the low of, we'll just say here. Well, there you go. Thank you for giving it to me beforehand. Thank you. Thank you there, buddy. I almost said your name. The shorts have been murdered. The longs on the breakout were not allowed to be profitable, and we're trading up into that shaded area I talked about this morning. Not quite yet. It'll be there. So Thank you. I appreciate you guys at the exchanges working with me in my schedule today. I was getting ready to leave them and you helped me out. So thank you very much.